What is good, ladies and gents? It is another week of doing the forward testing. I think it's been like 4 weeks so far, but they're looking good. So let's review like how this week was. It was a pretty good week, so let's go through it. And for this week, I'm up around 6.4%. And yeah, this week was very great. We had around 3 winners and 1 loss. And yeah, they were good. Let's do a review of them and see what went good and what went wrong. So this trade here was a loser. I cut it on Tuesday. I didn't trade on Monday. I think, yeah, on Monday I didn't find any opportunity. So this trade was a 2.5. The reason I rated it 2.5 is because I think I was like kind of over biased, and I kind of married my bias here, like not much, but I still thought the market would continue to go higher. Let's just go into the analysis. So look at the daily time frame. You can see that it was this day here. So I was bullish, but the day had different plans. So I can't say that I was wrong at any point. It looks like the market wanted to form a fair value gap that it could retrace to on the next day. And when I go down to the 1 hour, I thought that price could start rejecting immediately, but it did not. It dropped to like it would have dropped maybe potentially to this gap. I could have waited for that, but it did not, because I don't really use auto blocks in as my confluences that much. And yeah, I ended somewhere around here in this candle. And one of the reasons I entered is that I saw this sweep, these lows here get taken out. So liquidity sweep. Now when I go down to 5 minutes after seeing this liquidity sweep, and price ended up putting in another inducement, if I can call it like that, I was like, okay, this is the time where one could enter. And then I saw it drop, it swept liquidity, pushed higher, and this is on me, guys. I marked this as a shift when we had a fair value gap inside here, but I counted this as a shift, and I ended up entering somewhere around here. One entry was here, another one was here. So what could I have done better here? I could have used the fib. I entered in somewhere around premium. I could have entered here. If I could have entered here, it would have been a loss still, but it would have been a little bit better. So I can't blame myself much at this trade. I had a pretty solid bias, followed my rules, and just that the trade didn't pan out. So something around here. Stop get hit, and target was these relatively equal highs there. Should give you around a 3.5 R or something around there. So yeah, this was the trade. I was looking forward to retracement, then the push higher. So losers exist, and this doesn't mean that I'm a bad trader. This means that I'm a trader who takes losses and still shows up. So yeah, I think this is it for this trade. And let's go to the next one that I took it on Wednesday. It's my biggest trade so far, like in my prop trading history. This is the biggest trade I've ever got. I got it on FOMC. I didn't predict FOMC, but I reacted on how it moved. Let's go full screen mode here, and let's use this default template. So we're on the daily time frame, right? I traded counter trend. The funny thing is that this day I was bullish, but ended up taking sales. Let me show you my analysis. So the reason I was bullish is because we had this gap, but remember we had some news. And go down to 1 hour. I saw that market had pushed higher. No, we hadn't reached all-time highs, but we pushed higher, then we started to drop. When we look at ES here, it had started to form SMTs with this high, this high, and this high. Let's switch to, is it possible for us to switch to trading view? I think it would be okay to switch to trading view, but let's not do it. So we had all we had was an SMT there with ES, which gave me like a confluence for me to take an entry. So we had an SMT, and this high is here like this. That's the first thing. The second thing was that ES had put in a liquidity sweep, which means like it's also like NQ had already had that liquidity sweep. And when we put fib right here, you can see like, if I not right there, it was like somewhere around here. If you want to sell, we obviously push back into premium, then start dropping. So this is how it should look like. Push up into premium, then we start to sell. And now I went down on the 5. You can also see that we had a fair value gap here. So it's like we had the sweep above here, right, or here, then the shift was here, then the retracement of the gap was here. So it didn't present in the normal like way it would present, like the sweep, shift, then just the retracement, but we had this sweep which was disguised as an SMT. The reason I took it on NQ was because NQ was more stronger, because it failed to form the high, and we were rejecting this gap. So I went down, and yeah, I was still thinking about it when it was here, and boom, right on this candle here, I took an entry, sell right there, stop above the high, and my target were the 1 hour, I mean previous day low. I think is it the previous day low, the 1 hour low, somewhere around there. This low here, I think it's the 1 hour low from previous day. This low here exactly. Now you can see how good take profit got hit. It was a 3R beautiful trade. My stop was kind of trailed somewhere around there, so beautiful 3R here. And yeah, I think this is it for this trade. And let's see the insights. Profit exceeded drawdown 10 times. Very beautiful. So let's go to the next trade, which was also a winner. Like, I took it on Thursday. I was bullish. We were at all-time highs, and I was looking for price to deliver higher, and I took an entry based off of the ICT entry model. So first we see the gap in the 1 hour that we've dropped to, and we also had an SMT with ES right here. So SMTs look, they're really good confluences. Now went down to 5 minute. I also saw that we all had an internal sweep right in that fair value gap, liquidity sweep. Now we go down to the down time frames until we find an entry. Here on the 3 minute, you can enter here, but I waited for a shift. I wanted to see a better shift, so I went down to 1 minute, and then I saw this shift in structure and a retracement into a fair value gap. And you might be wondering why enter in this one when you can enter lower on this one. Well, I put the fib here. I was like, okay, we're gonna touch discount, and you can see we touched it by a few pips. So I was waiting for power of 3 to deliver on the daily candle. Since I was thinking that we could touch the midnight open, then reverse. So let's mark the midnight open so that I can show you what I was thinking at the time. Look at where price was. We were like terribly above the midnight open, so we don't have to fully rebalance to discount, and that's why I ended up taking the buy without waiting for these wicks here, or for at least for it to reach here. Since we're close to the midnight opening price, then that means like price is already in discount or has already came from discount, which is why I ended up taking this trade, because power of 3 was delivering good here. So we have this sweep, shift, then retracement to the gap, end up entering on this candle here and targeting the all-time highs, which were somewhere around here. So this was the trade, something like this, and I really had a kind of big stop loss, but it is what it is. It is what it is. So I think it was this, something like that. And that is all for this trade. The next day, which is yesterday, I kind of had hesitation. I was fighting hesitation and the fear of execution. Like, I had fear of executing as well. So let's do it like this. Let me show you the trade. So first, I could have got an entry in the morning, but I ended up not trading in the morning because this trade never dipped into the red. Clean execution. Anyways, I could have got a better entry in the morning. Let me show you why. So I was bullish on the day, right? So when you go to the 1 hour, you can see that overall trend was bullish. Now 5:15, I end up taking a trade to take out this relatively equal lows. It's a very small one and very small risk, because I know that my emotions could try to hijack the process, and the reason is because I had fear in the morning, so it could possibly affect my executions in the afternoon session. So in the morning, my trade could have been somewhere inside here. Wait, is it here or here? I think it was somewhere inside here. Let's go through it. So 5 minute, I think it was somewhere inside here, because we also hit all-time highs. How exactly I see it now. So it was this move here, and here also I also missed. It's like I missed 2 moves because I was also waiting on the midnight open to show me like another potential entry price. Midnight open was somewhere around here, and you can see that we ended up getting very close to it, almost tapping into it, but we did not end up. Actually we did. I think I saw it on TradingView, like we tapped into the midnight open, but probably I marked it badly, but yeah, it delivered as good as I wanted it. Now it did tap the midnight entry on NQ, not the NAS 100, because I use a CFD firm, so it has to show up as a NAS 100, not NQ. Now we'll go down to 1 minute. Where I should have executed is somewhere at 10 side there, right? So here it is. We put in a beautiful SMT here, right? And as we put in an SMT, I think there was a 15-minute fair value gap inside here, just right here, as you can see. We had this beautiful 15-minute fair value gap, small one, and there was also, yeah, that was the gap. And then 5-minute there was some other gaps, but all I considered was the 15-minute. And then when we drop lower, you can see that we had a beautiful SMT push to the upside, shift and structure right on this candle here, beautiful shift. And also this called you can see it touched the change in the state right here and ends up delivering higher. So this was the gap, and you can see how beautiful the candles closed inside the gap. I saw it like in real time with my eyes. So this candle sprint, and I was like, why am I anti-executing? Really fighting my emotions. So if I managed to take a good entry, it would have been a absolute banger, like 2.8 hour trade. So this is the one that I missed. Now the one that I took was a really short one on the in the PM session. I think I risked like 0.3% on that. 0.6%, not even a full percentage on that one, because I wanted to see like if price could end up taking out these lows. So let me pass you through my thought process. So these are relatively equal lows. Let me remove this here. So we had these relatively equal lows, Now I was sitting on the charts like just after lunch, and I had seen that we took out like the most recent high, very clean, like took out the high, generally close, then pushed higher again, put in some sort of inducement, and then we put in this gap right here, retracement into the gap, then shrub, and starts to drop. So I spotted it somewhere around here, like when I was still getting my analysis straight. Then entered on this candle here. My stop was first above, somewhere around there. My take profit was here. Then I kept trailing it slowly by slowly as price moved until it reached to break even. And now this showed me that there are many bubbles. We swept liquidity, we've shifted internally here, retraced to a gap, then started dropping. And when you look closely, we also have another small gap here. And what does this indicate? Venom, like the exact Venom model. We put in two gaps like this, trace back up, and where this swing was a sweep, so we retrace back into the gaps, or the, what's it called, balanced price range, BPR. So we trace back into this kind of BPR structure, like, then we start dropping. So I took a small like short from here, was targeting these equal lows, and yeah, GFT ended up filling me somewhere around here, and then the second one also somewhere around there. I don't know why it was here, but I think on the phone it looks like way more cleaner. Let's check it out. Where is it? Exactly. So this is how the execution is looking like on the phone. See if you can see it. Yeah, these are the executions. I entered somewhere around there, then it started dropping. So I this one closed by TP, and then this one didn't get closed. This second one didn't get closed exactly on time, so I ended up closing it manually, because like the spreads made it hard for me to close in time. Right, so this was Friday's trade, and I'm overall grateful. I mean, I'm always grateful for how things are looking, and I mean, I'll keep on developing and making better choices, learning how to make good, sound money management. And now the thing I'm focusing on with my learning is, how do I know when to go risk on and when to go risk off with my trades and my overall process. So let's do an overall look out on the week, and then we're done with this without taking way too much of your time, even though I already did, because this is already like 20 minutes. So let's do it like this. Trade seller, paint on the side so that I can look for the trades. So I'm gonna fill this real quick, then we're gonna continue. Right, so let's review this. So my best setup was on NQ, and my worst, because I'm trading like NQ, yes, mainly. Good setup Wednesday, one from FOMC, and the worst one was from Friday. It's not that this trade was bad, the trade was absolutely good. The trade wasn't bad, but the psychology I had in the AM session is something that was bad, and I'm grateful that I'm working to improve that. And so it's not a bad trade or setup, it's a bad psychology or mindset of thinking that I shouldn't kill a winning streak. I'm not targeting to kill one, but I shouldn't fear if one is killed. And the thing that I did well last week is that I had planned to risk just full 1%, go full on and risk, and I had written it. You can see it in the videos. Did I do a video of the pre-market weekly game plan? I don't know if I did, but you can check like what I had written out here. 2 losses, I step out of the market, full 1% per trade, no matter what. And if possible, like to do a pre-market meditation, because I wanted to like have myself in one place, because I'm at work. There's too many things in the environment that could, disturb my trading. And the things that I can replicate was risk management, analysis, and effective journaling, because journaling has helped me a lot. I can figure out some patterns and some things that I'm doing wrong over time. The most costly mistake was fear of execution and hesitation. And I'll be working to fix that as well. So I think that was all for the week. I was bullish, remember, on NQ. Yep, very, very bullish. So I think that was all for this week. Let's meet again next week, and until next time, stay blessed. Peace.